And we've got the business news now right here on France 24 with Catherine Nicholson, who's joined us on set.
Hi there,
Catherine, you've got more signs that the Chinese economy is once again showing the world how it's done.
Yeah, we're talking about their import and export figures. The latest figures for December just came out in the last couple of hours. We saw that they increased their exports by 14% in December. That was a bit of a surprise even to analysts. Imports also up 6%. This rounds off the 2012 figures, so we've got those as well for you. Exports up 7.9% over the whole year, and imports up 4.3% over the whole year. This does, in fact, compare to a target by the Chinese government of 10% for each of those figures, but they're still good signs of increasing domestic demand, signs for analysts that China could be gradually emerging from its downturn of recent years. It's a recovery. Analysts still saying it could be slow, it could be weak, but it's a recovery all the same.
Right, demand from the domestic market still fueling growth in China. And has that boosted the markets there?
Yeah, Chinese shares did end the day slightly higher. We can see those figures there for you, lots of green across the board. And in Japan, the nuclear sector has been performing strongly. This after the new Prime Minister announced he's relaunching nuclear power stations almost 2 years on from Fukushima. Here in Europe, the market's just opened in the last few minutes, and we can see there's lots of positivity there. The only one not fitting in is the Paris CAC 40, but only down ever so slightly. And we'll give you some of the big winners and losers a bit later on.
All right.
It's going to be a day of European things, in fact. Central bank meetings later in Europe. Frankfurt and London, ECB and Bank of England, both expected to keep their interest rates at these very low levels, and they're not expected to announce more quantitative easing, flooding the market with more money. Analysts saying that there's not really much more space for the central banks to go. Also here in France, the central bank has confirmed that GDP did fall in the last quarter of 2012. And one more sort of national thing to mention for you, in Spain, the government is selling bonds later on. So lots for the macroeconomists to look out for.
And let's look at the business angle of the news coming out of Venezuela. Hugo Chavez has been given the green light to postpone his inauguration indefinitely, but there are signs that investors don't have much time for instability in the country, which is Latin America's biggest oil producer.
Venezuelans are not the only ones worried about the political uncertainty gripping the country. Investors, too, are feeling the pinch.
Yes, bond prices have dropped, and just this week international banks, Credit Suisse, Barclays, Bank of America, and analysts from the Eurasia Group have written about the worrying things that are happening in Venezuela.
The standoff between the opposition and the government over the postponement of the president's inauguration is causing ripples. But as the world's 9th largest producer of crude oil and the 5th largest oil exporter, Venezuela could withstand short-term shocks. Oil accounts for 96% of the country's exports and half of the government's revenues. Economists say the focus on oil has come at the expense of investing in other sectors.
One of the fundamental characteristics of Venezuela is that it lives off its oil wealth. When President Chavez came to power, oil prices were below $20 a barrel, and today they're near $100 a barrel. So there was a very strong growth in oil revenue. And this has also meant a strong growth in the Venezuelan state.
As the spending gap grows, Venezuela must deal with an overvalued currency and soaring inflation. It has the second highest inflation rate in the world. Last year, it was over 26%. A currency devaluation has been expected, but those plans and other needed economic reforms are on hold as the world waits on Hugo Chavez's health.
All right, let's see what else you need to know about in business news. It's been a competitive Christmas for British supermarkets, and the UK's biggest chain, Tesco, has emerged with strong sales, up 1.8% in the 6 weeks to January. That's their strongest gain in 3 years, boosted by customers increasingly using the Tesco website to buy their turkeys and mince pies. Tesco shares opening up more than 2.5% in London today.
The American insurer AIG has decided not to sue the US government for rescuing it. The company's former CEO is now suing for $25 billion in compensation for what he says was an unfair bailout deal. But the AIG board will not be joining the lawsuit. Taxpayers paid out $182 billion to stop the company from collapsing in 2008, taking an 80% stake in the process.
And angry French taxi drivers are joining a mass strike this Thursday to protest about falling income. Airport travelers are being particularly badly affected so far. The main demonstration will be close to the Eiffel Tower in Paris this lunchtime, but the strike is hitting other big cities that include Marseille and Lille. Drivers say they're losing out thanks to an increase in private hire vehicles, illegal car-sharing schemes, and a decrease in hospitals using taxis to transport passengers. And Catherine, staying in France, the steel firm ArcelorMittal, that's been making the news a lot recently, could be bringing back employment to the industrial sector.
Yes, we're not talking about anything drastic, but a few hundred jobs, perhaps temporarily, but this is still good news for workers. They're going to increase output at a plant in the north of France. Some other news from the company coming out at the same time. They're planning to raise $4 billion on US markets. Some details on exactly how have been coming out in the last couple of hours. And their share price has been gaining in Paris in early trade today. Josh Vardy has more on that plant in Dunkirk in northern France.
The news spread fast on the ArcelorMittal Dunkirk plant in northern France. Its second blast furnace is to be reopened, causing widespread relief across the site.
Well, we've had no news recently, so this announcement is reassuring.
This blast furnace has been closed for maintenance since August 2012, and it looked likely to remain closed permanently. However, a slight upturn for European steel and investment of €8 million may cause hundreds of temporary workers to get employment.
Well, we think Dunkirk should function with 3 blast furnaces. There's nothing that makes us think that it can work with only 2. So we're going to fight in the days to come for real jobs, stable jobs, employment at ArcelorMittal, permanent jobs.
However, over at the Florange site, relief is not the word. Employees on strike there have blockaded the facility, and barriers have been set up at the local train station since Tuesday evening. The action has been called over the planned closure of the site, scheduled for March the 31st.
And we finish our morning's work with champagne, but this is controversial champagne.
Yes, and I don't have a bottle for you under the desk. I'm very sorry. This is champagne that's going to be served at President Obama's inauguration a little bit later on this month. This champagne is from California, which is a very patriotic decision by the people
organising it. Well, that means it's not champagne then, right?
Well, there you go. There's the rub, as they say. The Champagne Bureau, which operates to stop people misusing the word champagne, they are frothing at the mouth at this. Because, as you say, only champagne from the Champagne region in France can legally be called champagne, much the same as feta cheese. If you make it in Devon in the UK, you have to call it Greek cheese, that sort of thing. However, on the dinner menu for the inauguration banquet, they've written California champagne, California. They should have written Californian champagne. To you and I, it might sound like a quibble. To the Champagne Bureau's Champagne Cop, it's a big deal. They are, in fact, reprinting these menus. They're even forcing Barack Obama to change his plans. Very, very controversial. Catherine Nicholson stays on top of that story with Business News. Thank you very much. Stuart Norville is back in just a few minutes with World News. Bye-bye.